Welcome to the Wednesday edition of Tech Stocks Daily, where we're about to dive headfirst in today's most electrifying tech market movements. Get ready as we unravel Microsoft's intriguing AI investments and stock challenges, explore Google's big leaps in AI-driven robotics and AR aspirations, and dance to Spotify's stock recovery beats and massive artist payouts. Plus, we'll chat about meta platforms, where questions of valuation stir excitement and debate. Whether you're an investor, a tech enthusiast, or just curious about where the tech world is headed, we've got the insights you need. Stay tuned for all the details. Hold on to your keyboards, folks, because Microsoft made quite a splash today with some headline-worthy news across various aspects of its sprawling empire. Let's delve into the specifics that have the tech world buzzing and investors either pulling out their wallets or pulling their hair out. Let's kick this off with some juicy financial analysis. Microsoft's financial metrics caught the eyes of analysts today. Despite a price-to-earnings ratio that's a smidge under the industry norm, Microsoft is being flagged as potentially undervalued. Bargain alert, but here's the twist. They've got a relatively high price-to-sales ratio, suggesting the stock might be pricey based on sales alone. It's like finding a luxury item on sale. The sticker might say deal, but those credit card charges tell a different story. Profitability? Microsoft's got it in spades. Their high return on equity and booming EBITDA puts them ahead of the game for generating dazzling profits with their existing equity. With commendable revenue growth outperforming industry averages, it's clear Microsoft's hitting high notes right out of the app drawer. But not all is roses and operating systems. Despite their bold foray into artificial intelligence with a staggering $80 billion investment this year, Microsoft stock didn't manage to wow the crowd, recently hitting a 52-week low. Concerns about immediate returns on AI investments are giving investors the kind of jitters you'd expect from a particularly glitchy beta test. While Microsoft's latest earnings did beat Wall Street predictions, cloud profits lagged, frustrating investors who banked on AI-driven growth. Meanwhile, Trump-era tariffs and fluctuating market conditions have continued to shake things up. Here's the tea. President Donald Trump's tariff announcements rocked stocks like that one techno song on repeat. Intel inside? More like tariff trendlines outside, troubling stock prices across sectors. Amidst all this, deep-pocket investors have been flaunting their options. Specifically, call and put actions suggest big money's ready for some serious Microsoft stock moves. They're eyeballing a share zone from $300 to $500, so keep those portfolios close. Speaking of a leap towards the future, Microsoft shook hands with SUSE, integrating Microsoft Sentinel with SUSE Security. This partnership introduces an AI-enhanced approach to battling cybersecurity nightmares, fortifying walls like an army of digital knights. Through Sentinel's eagle-like vision and the wizardry of Microsoft Security Copilot, enterprises will spot and shut down cyber threats with the kind of speed Godfrey Hounsfield would envy. But the big question remains, will investors take the AI plunge with Microsoft or seek safer waters? Analysts continue to cast optimistic shadows, with most recommending buy for long-term gains. That's right, Microsoft stands at the crossroads of potential undervaluation and breakthrough innovation. So stay tuned, investors and tech aficionados. Could the Silicon Valley giants' moves today usher in a new era of tech dominance or merely scratch the surface? Hey tech enthusiasts, hold on to your circuit boards because Google has been buzzing in the news today with not one, not two, but three exciting developments that signal its aggressive moves in the AI and tech world. First up, Google DeepMind has unleashed a new wave of innovation with the unveiling of Gemini Robotics, powered by their Gemini 2.0 AI model. This is not just a simple upgrade. It's like giving robots the ultimate intelligence boost. The Gemini robotics system acts as a vision-language action model, enabling robotic companions to process and respond to their environment more flexibly than ever before. And it doesn't stop there. The enhanced Gemini robotics ER model adds spatial reasoning to the mix, allowing these bots to tackle 3D space with ease and, dare we say, grace. This marks a major leap forward in AI-driven automation, as Google partners with robotics giants like Apptronik, Boston Dynamics, and Agility Robots to transfer these models into real-world applications. As a result, Alphabet's shares experienced a delightful pop, revving up tech investors' spirits and hinting at even more thrilling developments to come. Meanwhile, in a separate strategic partnership with South Korean travel tech titan Yanolja, Google Cloud is stepping into the world of generative AI. Yanolja plans to integrate Google Cloud's advanced AI infrastructure into its travel platform to craft hyper-personalized travel experiences. Essentially, this alliance is poised to fast-track Yanolja's mission to revolutionize global travel by harnessing AI to predict your travel headaches before you even know you're on vacation. We're talking about cloud-based kiosks for seamless check-in, check-out, AI-boosted concierge services, and enhanced automation for operational efficiencies. It's like giving travelers a digital butler with jet lag evaporation powers. But wait, there's more. Google is reportedly finalizing a groundbreaking $115 million acquisition of the Canadian eye-tracking startup Ad Hoc Microsystems. This potential acquisition reflects Google's keen focus on augmented reality technology, especially in light of Apple's own AR adventures. Should this acquisition close, Ad Hoc's adept team and their MindLink smart glasses technology will join Google's Android XR crew. This could mean a lot for future AR hardware from Google, possibly bringing new lenses into focus for an industry that's hungry for novelty and innovation. Google's doubling down here indicates it's committed to refining AR experiences that might just teleport you into the headset wars, with cutting-edge tech that'll have wearable tech warriors sitting up and taking notice. So there we have it, folks. On one hand, Google's duo of AI-driven robotic platforms is stepping off the digital planes into physical realms, thanks to extraordinary leaps in AI understanding and spatial perception. On the other hand, their strategic partnerships and acquisitions signify a broader push toward reshaping the travel industry and exploring new frontiers in augmented reality. Google is clearly sewing together the threads of tomorrow's technology today. Stay tuned and stay wired for the next big piece of tech wizardry coming from Google's very innovative blender. Today's tech news is bustling with Spotify-related buzz, and for good reason. The music streaming titan is making waves on multiple fronts, from stock surges and substantial payouts to revolutionary new initiatives in artist compensation. Let's get into the groove and explore what's up with Spotify today. First, on the financial and market side, Spotify's stock has witnessed an invigorating leap of 3.9%, reaching $508.44. This spike is quite the turnaround, especially since the stock suffered a 23.3% decline over the past month. The recovery is largely attributed to Spotify's solid performance in audiobooks, music, and podcasts. Talk about a full-court press play for this tech giant. Investors are keen on Spotify's upcoming quarterly earnings, with predictions of $2.29 earnings per share. That's a staggering 118.1% increase year over year. The company projects revenues to reach a cool $4.38 billion, up 10.9% from last year. Despite a slight dip in the earnings estimate over the past month, this stock is soldiering on, powered by its auditory empire. Now, swinging over to the expansive ocean of royalties, Spotify announced it has paid nearly 1,500 artists over $1 million for their 2024 streams. This revelation is akin to music to independent artists' ears, as it highlights a democratization in the industry. Over 80% of these artists didn't need a hit song in the top 50 to hit that $1 million mark. Instead, achieving around 4 to 5 million monthly listeners suffices to reach that golden threshold. Thanks to Spotify's global platform, more musicians are finding success without needing to butcher their throats at karaoke nights. In a broader context, Spotify has spurted out a jaw-dropping $10 billion in royalties for the year 2024 alone, making it the hottest thing to happen to music since sliced karaoke. It's an all-time high and highlights Spotify's unprecedented largesse towards the music industry. Since its inception, Spotify has paid approximately $60 billion, and the past few years alone have seen spikes catering to a more diverse and inclusive array of voices and languages. In 2024, artists from over 50 languages reached new earning heights, with more than 17 languages making million-dollar milestones, far more than seen in prior years. Importantly, Spotify says all this not just with loudspeaker volume payouts, but with a confident strut towards diversity. Over half of the artists making at least $1,000 annually from Spotify owe their earnings mainly to international audiences. It's like a United Nations of musical economy, where artists receive cross-border love. Finally, Spotify continues its strategic prowess by announcing its new Music Pro subscription, dripping with premium features, all for $18 a month. Navigating its first profitable year with strategic savings shows Spotify is not just resting on its laurels, it's paving the path towards more user engagement and artist success. In conclusion, whether it's record-breaking royalty payouts, surging stock values, or its innovative new subscription model, Spotify proves it's much more than a music streaming service. It's a cultural trailblazer with a global playlist. Hang tight and stay tuned for the next track in Spotify's playlist of achievements. Hey there, tech enthusiasts. Today, Meta Platforms, the digital giant behind your favorite online hangouts like Facebook, Instagram, and WhatsApp, is making waves again. So why is everyone buzzing about Meta today? We're diving into two big pieces of news. First up, we've got some intriguing developments in the world of Meta's options trading. There's a notable bearish stance among some market bigwigs, making it a hot topic for anyone invested in or keeping a close eye on this tech titan. A recent analysis revealed that while 37% of traders are hopeful about Meta's future, a more significant 46% are betting on the darker side, expecting a downturn. The volume and open interest in options contracts suggests that major investors see European exotica prices within a wide window ranging from $320 to a sky-high $990. If you're a numbers person, want specifics, or trade options, this is a crucial sign of where some believe Meta's stock is heading in the near future. On the second front, the company is shining in a comparative analysis within the interactive media and services industry. According to the latest evaluations, Meta's financial metrics reveal a company that's both undervalued and overvalued, depending on which financial ratio you examine. Even if we don our analytical hats, Meta's price-to-earnings ratio indicates it might be undervalued. In contrast, its price-to-book and price-to-sales ratios seem a bit high, but maybe that's just the cost of market adoration. What's particularly impressive is Meta's return on equity, the EBITDA, and phenomenal revenue growth compared to industry peers. It's as if the company is built on rocket fuel, not just billions of dollars and billions of clicks. Not to mention, Meta's low debt-to-equity ratio keeps it flying high above its peers in terms of financial stability, suggesting a balanced and less risky capital structure. From options to earnings, Meta Platforms remains a stock market juggernaut, even if some are betting against it. So what do you think about all this? Are the whales making a splash with their bearish bets, or do Meta's financial vitals paint a much rosier picture for its future? We'd love to hear from you. Drop your thoughts in the comments below and tell us, are you tweaking your portfolio, or are you simply sitting back and enjoying the Meta show unfold? Keep those comments rolling. Your insights are what make this tech journey even more exciting. Until next time, keep those thumbs scrolling and your minds tech-tuned. All right, bright investors and tech aficionados, let's zoom in on today's featured ticker, Google, otherwise known as GOOG. Now, with all the electrifying news pulsating through this tech behemoth today, I'm leaning towards a buy recommendation. But remember, this is just one perspective, and I urge you to do your own homework before making any investment moves. Here's why I'm thinking buy. 1. Exciting AI developments. Google is charging into the AI realm with major innovations, particularly with their announcement of Gemini robotics. This venture isn't just dipping toes into the future, it's diving right in. The collaboration with heavy hitters like Boston Dynamics might hint at transformative leaps in AI-driven automation. Capitalizing on advancements in both the hardware and software of AI gives Google a nice, future-focused edge. Number 2. Strategic partnerships with Yanolja. Google Cloud's alliance with Yanolja propels it into more segments of the travel industry, wielding generative AI to reimagine personalized travel experiences. Such strategic collaborations can be catalysts for growth, setting Google up to benefit from the renewed global emphasis on travel tech post-pandemic. Number 3. Strong acquisition moves. Heading towards an AR-rich future, Google's potential acquisition of Ad Hoc Microsystems signals robust intent to challenge competitors like Apple in the augmented reality space. This illustrates its commitment to pioneering new tech horizons and could yield exciting, novel ways to engage users. These strategic maneuvers, coupled with a pop in Alphabet's shares today, suggest promising upward momentum, not just for the stock, but for the brand's innovative prowess. However, remember, the stock market can resemble a thrilling roller coaster ride. So, before you plunge in with buying and selling, check your seatbelt of research and gut check against your personal financial situation. So folks, what do you think? Are Google's AI ambitions enough to sway you to hit that buy button, or do AI conversations just leave extra circuits buzzing? Dive into that comment section, and let's see what the collective tech brain has to say. Today's tech market was a whirlwind of exciting developments and intriguing dynamics. Microsoft found itself tackling AI investments while navigating erratic market waves, showing promise, but also concerns about immediate returns. Over at Google, AI-driven robotics and strategic partnerships made waves, suggesting bold strides toward innovation. Meanwhile, Spotify's stocks climbed back with record payouts and groundbreaking new models serving both artists and investors. Meta Platforms stirred strong opinions in the trading community with a mix of optimism and skepticism about its future value. If you enjoyed diving into today's tech tales, don't forget to give this video a thumbs up, subscribe for daily updates, and share it with your fellow tech fanatics. Be sure to join us again tomorrow for another dose of the latest and greatest in tech news. Keep those circuits charged and catch you on the flip side.